roll from there. Now I'll show you another pattern that I called exactly on the nose. I don't know if I've still got that email. Sorry, I'm just trying to find. So this is, I was following this ETF called the IGV. And this was back in February. And the IGV was, where was it? So this was the IGV here, and it was around 280. And you could see how there was this head and shoulders. So the IGV is the ETF that tracks the tech sector. Now, what I'm gonna do is I'm gonna put the IGV on top of this one. So I'll show you one layered on the other. So when the IGV was trading at 380, I predicted exactly where it was going to go to. Now, it's not a magic crystal ball. It's basically these markets put on patterns, and then you can understand where they're going to go. So the bottom chart is this ETF. It's the IGV, and it basically tracks all of the technology stocks like Microsoft and Intuit and a whole bunch of things. And so I saw two bear patterns in the IGV starting last November. One was that head and shoulders, and the other is just exactly what I just showed you in the S&P. So you can see when this thing broke down to 380, I predicted exactly where it was going to go to. I said this, back in February, I said this is going to come down to 260, right back to where this thing starts. And you can see that's exactly where we came down to. So now I think the S&P has formed the same pattern. And you can see how, when the IGV fell out of this thing, it mucked around here, just like the S&P is mucking around here. So, I mean, this is actually kind of scary how closely this is mirroring. So, this is like, sometimes having yesterday's newspaper. Let me just take away some of this. So you can see how this pattern on top, the S&P, looks just like this pattern. And you can see once this pattern broke, it went to the beginning of the triangle. So I am surmising that is what's going to happen with the S&P. Now we could, this thing could just muck about, through September, October. And, by the end of the year, we could look like that. So we'll see. What I do is I look at patterns, and then I see how does the market play within the pattern. So if, for instance, now the S&P starts going here, I'm not going to say, well, I was right and this thing's going down. I look and I draw my pattern, and then I see how does the market play within the pattern. So you can see the behavior is pretty scary, the same. You come down, you break up, you come make another low, and now you come up here and you make another high right here. And then you go and make a new low. And this is basically really doing the same thing. Now that I look at this thing, it's pretty scary. So you break down, you kind of come up here, make this top, break down, you come up here, and somewhere in here, I surmise that it's going to make another top and go just like this did. So it's going to be interesting to see how this plays out. But what I do is I don't, have any fixed opinions. I just basically draw my patterns and then see how the markets correspond to what I look at. And if it breaks the pattern, then I'm just going to buy it. And so if it's not going to do, one thing, it's going to do another. And so I'll know very quickly somewhere in this area, between 4,100 and 4,200, if this thing's going to start crapping out. And I suspect it will. So I still think we have a long way to go on the downside. So, these moves, right now are just misdirects, and, I'm playing around. And, right now, I'm getting long a big position in this stock Schlumberger, where I kind of went through, if you were here yesterday, or even the day before, kind of my thesis of why. So, sometimes you see some patterns, and then sometimes you see a sequence of patterns. And what I'm looking at in Schlumberger, SLB, is kind of very close to a pattern I saw back in 2018 in another stock. So what I'm looking at in Schlumberger, and I think I went through this yesterday, was that you have a sequencing of a couple of things going on. Initially, you had this reverse triangle. And then you broke lower out of here, and now you've put on a bottom here, and now it looks like you're re-challenging this. So this looks awfully lot like the sequencing that I showed you, where I did this trade back in 2018 and made, mid six figures on this trade. So hopefully it'll work again. Where is this thing? Here it is. So this was this pattern that I observed in Facebook in 2018. We had the reverse triangle, you broke out of the triangle, you put on a bottom, and then when you retested this thing, it went on and made new highs. So when I saw this bottom down here, I surmised that we were going to go much higher. And so I started initially buying the stock right around 154. Then I blew it out when it went to about 170, made a few dollars there, waited for it to circle back, and then start buying these, kind of out of the money call options, which is a bet that something is going to go higher. It's a very leveraged bet. So I was buying these 185 call options for 30 cents, and they eventually went to $4.50. So I made 15 times my money in about 3 weeks. So, here was some of the trades that I did in the 180s, the 182.5s, and the 185s. And I had many more than this. So I made a lot of dough. But the important thing is, this thing is starting to look just like that trade, where you had this reverse triangle, you fall out of here, you put on a bottom, and now you're starting to retest this area. Now, what Facebook did in this area was actually it came back down here, and then it went. So, I'm not sure if we're going to get past this little reversal here. I'm going to see how we do tomorrow. But, I'm surmising that, we're going to get a move, higher. And so what I did was I bought these $40 call options, that expire August 19th. So I've given myself 3 weeks. And I started buying these things around 40 cents. And today, I don't know where they closed. They closed. So where's SLB? So these are, you look at all these options, you go to it. So typically I only buy 1 week in advance, but I wanted to give myself some time. And so I bought these August 19th 40 call options. And you can see they're still trading around where I got in. They close about 50 cents. I bought some at 43. I bought some at 50. So, they haven't really started to move. They're still a little bit out of the money. So, I've given myself three weeks to see if this thing can go north of here. And sometimes, even if the thing, the markets go higher, these things will get a scare. I can triple my money, even if this thing doesn't end up going into the money. So I'm just banking that we found a bottom and that this is going to create a trap. So whenever you kind of come under a certain area and then retest it, now you get all these people trapped. It can just really uncoil very, very quickly the other way. So I'm kind of, banking on that. So let me just circle back to the dollar Canadian and the gold trade. So earlier in the week, I told you that I was getting short dollar Canadian. And you can see now we're, on the low of the day and the low of the week. I started getting short, up in this 129 area, and now it's 128, but I'm not getting out of my trade, right? So a lot of people think, well, you made all this money, shouldn't you hop out of this trade? And to my mind, the trade's, just starting. In fact, I might buy some more here. So you can see that, where are these trades? So I've got some trades at 128.76, and I'm making 13 grand in that. And I've got some at 128.30, and it's right around there. And then I've got some I sold at 128.57. So right around where it is now. But this is now just getting interesting. So what I shared with you on Monday was my thesis that the dollar Canadian has formed a big bad trap. So you can see that I had no clue what the Federal Reserve was going to say. I had no, clue what the market was going to do. But that's why, to my mind, price is the news. Price is ahead of the news. Price is a discounting. So this dollar Canadian price pattern was telling me everything I needed to know. I didn't need to, listen to Jay Powell's conference to determine should I get short dollar Canadian. This was telling me way back here, by virtue of a lot of things that it did, that this thing was going to head south. So what we saw here is this is a trap play, like I think I'm seeing on Schlumberger, just the opposite, where the market went to a new high, trapped everybody, and the minute it broke out of here and then, came back in here underneath this 131, it created this, this bull trap. So for all these bulls who chase this 131, 132, now they're stuck. And if they don't get out, they're going to, be taking some sizable losses. So when you see a trap that sprung, it can go the other way very, very quickly. So what I'm seeing is that, you have this trap play, and then you have, this kind of head and shoulders here. So head and shoulders looks just like a man or woman's left shoulder. The peak is the head, and then you have the right shoulder, and now you're just coming through the neckline. So even though I'm making all this money, this is just getting interesting. This is just really confirming now. Now, whatever I've been looking at, now this is ready to go. So frankly, I think I'm going to actually short some more when I get off this webinar. I'm going to short some more because, again, today you also had another confirmation in the form of what I call this key reversal, right? So I look at patterns, and then I wait for a certain day where I can understand where the risk is. So this is on the daily chart, and you can see, again, we kind of have this trap play where market got above here, now it's turned lower, and now you can see that we have this kind of head and shoulders on the daily. So head and shoulders is a bear pattern. It's a reversal pattern. It means leading up here, you had an uptrend, then it hit this bear pattern, and so now it's likely going to reverse the other way. And so when we see these patterns, we look for a confirmation. And you can see today we just tickled this neckline, which is simply a line that's drawn through the pattern here. So now I see the pattern, and now I look for certain days that, to my mind, tell me where the risk is and where I should join the trade. And I call these key reversal. So you can see right here, this thing made a new high, close on the low, made a new high, close on the low, made a new high today, close on the low. So every time these guys have tried to push it up above this 129, it's failed. And by the end of the day, the sellers were in control. So now these bars actually point in the direction this market wants to go. They're actually pointing lower. So now, once I see the pattern and I see these things, now I know exactly where to join the trade. So if I put a sell stop there and put my risk up here, this is my risk, and who knows what my reward is. I don't know where it's going to go. I don't know how far it's going to go. All I know is that if I get in here, I've got a pretty good chance of making some money as it dances out of this area. So, I started saying this on Monday when I saw the reversal here. Then we had another reversal, but this is also why I keep my stop well out of the way. So you can see that, after I got short on this day, we had a little bit of an up day. Today we had another, and then it failed. And so, the idea of, where to put the stop loss. So my stop loss was at 129.55 above that day. And you can see neither of the 2 days, even though it went against me, I didn't care. It's now failed. And now you could basically probably move your stop to just above today's high. So now I know two things. I know where to get in and where my risk is, where it's going to go, how far, what time frame. That part I don't know, but I gotta believe that this is going to be a pretty good bet to go the other way and go quickly, because once you get jammed up here, they don't give these guys too much time to think about it before it's going the other way. So, are there any questions on this dollar Canadian? So Quentin says, how much below so typically what I try and do is I try and let the market confirm where, this is going to go. So typically, into the next session, I put the sell stop under the low of the previous session. Let me see if the next session. So the previous low was 128.07. So, you could put a sell stop at 128.01 or whatever it is underneath the low. And so basically what I'm looking for is, for the market to confirm what I'm looking at. So, into the next session, if it opens and goes much higher, now you have a pending order. It's not triggered, no harm, no foul. But if if in the other session goes higher, and this way you don't have to watch your screen. You don't have to watch your screen until your eyes bleed. You don't have to look for a magic crossover. You just have your pending order sitting here at 128.05. And then the market will just put you in the trade, and hopefully it will be an effortless trade. So I try and let the market do all the work for me. So I think this is pretty mature. I think you could put your sell stop, even before this thing. So sometimes I try and watch how the market oscillates between the previous day's closing price, meaning that what I try and do is, look at this. If this kind of, goes higher and then starts going lower, what I don't want it to see is come back through here and then go back the other way. So I just watch to see how the markets kind of oscillate here. And I think, again, once this kind of gets going, you probably will have no risk. You can just see whatever the high of the day is tomorrow, put your sell stop there. You've got this much risk and that much reward. So sometimes the market just starts de-risking itself. And you can see all of these reversals. This market has told you where that risk is. Very unlikely you're going to see that. And if you do, then you know where to get out. So the market has told you where to get in and where to get out if you're wrong. So somebody's saying, well, where's your target for this trade? So I would imagine it's, right back down here, at least. So what I tend to do is I put on my trade and then I'll put my target, way, way away. I'll put a target at 125.50, 300 pips away. And now if this thing starts barreling toward this target, then I'll just keep moving my take profit. I'm not going to stop this thing from making me more money. So to me, my objective is, for this thing to come back, at least back into this 125 area. So somewhere in here, you're going to make, so I'm looking to take a piece of the middle out of something like this. And I've already gotten started. I'm, already in profit. And so again, I'm looking to take this for at least a 200, 300 pip ride. And, then we'll see where it goes. Let me just look at the weekly. So when you kind of peel out of here, Now, this is the monthly. You start seeing that this is also a monthly reversal, and we're just about to close the month. So this thing is about to close on the low of the month. So now you've got a weekly, daily, but here you can see in the big picture. So this is the difference. If you're looking at a 15-minute chart, you're probably seeing about this slice of time. So you're trying to pick out 7 pips here and 20 pips there. And if you don't understand this history, then you can't set up a trade where you could potentially make a lot of money. So I don't know that I think this is the end, and this thing could, go, 1,000 pips the other way. So while I say that, I'm looking at 125, I think that this thing could go a lot lower, because if you look at this thing, you've got a big, bad double top sitting right here. So this thing has indicated that this was going to reverse a long time ago. And then this is what markets do. They tell you where it wants to go, and then they just oscillate. And these are months. So this has been going like a year sideways. But now you've got another very bearish signal here. So this is the big, what I call governing pattern. Now you've got this key reversal on the monthly. You broke out here and you trapped these people. And now this is likely going to start going the other way. And who knows, 120, 115, 110, you could have a monster trade in here. So your take profit is, what I do is I see how the trade goes. And, I start, we'll probably peel out somewhere in here where you can see some resistance. I'll wait for the bounce, short into the bounce, and then take it again. But the thing is, I understand what's going here on the big picture, right? This is a monthly chart where each one of these price bars represents 1 month in time. So you can see now, I understand the game that's being played here. So all this stuff that's, misdirects on a 5-minute chart, if you can kind of put it together in the big picture, I can kind of understand what this thing may look like on the long term. So Michael says, when you slide your profit, how do you slide your stop loss? So I tend to just leave my stop losses. I mean, frankly, sometimes I'll trade where I'm so confident. And I hate to say this, there are no stop losses anywhere and there's no take profits. I shouldn't advertise that, because when I feel like I've got something like this by the tail, I don't want to get shaken out. You can see the last few days, this thing kept going higher. I started getting short up here and here. And then the last couple of days, it just kept on going higher in here. And this is where most people, if you've got a 10, 15 pip stop, you're going to get stopped out all the time. But that's just an arbitrary stop. It means nothing. If I put, stop loss 30, 50 points from here, that's not enough. If I just, decide to put a stop here at 50 points, you think, well, nobody uses a 50-point stop. But that's just arbitrary. It could go there, and then it'll probably go there. So if I'm going to put a stop, my stop is at least up here and more likely there. And then once this thing gets going, I don't really move that stop. Sometimes you get a thing here, then you get a retest, and then it goes. So once I've got something, a tiger by the tail, and I think this is going to be a really good, position that could really go for a big move. My mindset now is that I want to go for a ride. I want to go for a nice ride. And so, you get a bump and grind along the way, but, this is where you have to have some patience. And it's a very different way of trading. But my whole mentality is to take out moves like this. I'm not looking to take out 7 pips in all this stuff. So it's just a whole different way of trading. So you get out when you see a reversal and set a stop. So, I would expect that once we get in here, that, you're going to get a bounce. So, as this thing starts barreling towards here, I'm going to start taking off, 20%, 10%, 30% of my position, let it come down here, let it bounce, and then I'm going to nail it again and then wait for that to go. So when you get to certain areas, you can see, they just come here. And then when there's previous, they respect these things. So, the market kind of tells you where, there are certain places that you need to kind of respect these numbers. So if and when this thing starts barreling down here, I'll probably start unwinding positions, look for the rewind, and then get short again. But the whole thing is to understand the cards that you're playing here. Understand what the game is. So I can see, all of these moves. I can kind of draw out how this is going to play out in my sleep. So Lucky says the Forex market is generally choppy. I keep getting stopped out of my usual. Yeah, because you're putting your stops too close. But to me, this looks good as gold. I mean, this has got everything that I look for. So I look for, I've got the trap, I've got the pattern, and now I've got the key reversal bars. 1, 2, 3. These 3 bars show me exactly where my risk is. But, if you've got like a 20 pip risk on this thing on a 4-hour chart, you're going to keep getting banged out of this thing, even though it's still going to go down. This for the last 2 days kept going higher. I got short in here, and then it went higher yesterday, and then it went higher today. But I was all the time looking at this as my risk. So I wasn't worried when this went up 100 pips here and then went up 120 pips there. It's a whole different way of trading. So you just have to deal with smaller lot sizes that you can put your stop here and leave it there. And this way you're not going to get banged out by the noise if you leave it there. And that's the way to do it. Now you're in position. Now I'm in prime position for a big move. I got the tiger by the tail. I got some here, here, here. And now I think it's going to get going. So, any stop, in between this bar is just random. 20 pips, 40 pips, 60 pips, 80 pips. It's all random. You're just picking something on some random 4-hour chart. It's meaningless. The bigger the time frame, the more history, you know what's going on. Now you're at the neckline. Now the gun is just being fired. Now we're ready to go. But, sometimes what happens is the markets will break a neckline and then they'll go retest it again. But so what? Your stop is still hanging back here. So let's say it goes, retests, and then it goes. Now it doesn't matter. So once you're in this thing, you don't ever watch it again. That's the discipline. Get in here, put your stop there, and go about your life. And wake up 3 weeks later and, you'll have a nice trade. But, if you're watching your trades every hour, watching for some magic crossover on a 5-minute chart, eventually you'll just get blown out. Quentin says, on this dollar, the first key reversal hit the high of the second key, or so we get stopped out. So, sometimes you do get stopped out. And then, I will just re-enter, right? If I feel like the pattern still has integrity. So I think what Quentin was saying, if you got short here and then it went and took it out, you got stopped out. Sometimes you got to break a couple of eggs to make an omelet. So if I do get stopped out in those kind of things, I didn't. So because, I kind of know enough where the markets come straight down. They don't go straight down. Markets need to reset. So you can see that, in this phase of the market. So this is where I entered the trade. This is where I sent out the trade 3 days ago to our members, right there. So, but if you, did get stopped out and then the thing comes in and reverses, get right back in. You take a few pip loss, but, again, your eye is on the prize. Where you can take 300-500 pips out of this trade. So yes, sometimes I do get stopped out, and if it's still the pattern is still got integrity, I'll get back in. But I just kept shorting into, all of these rallies over the last 2 days. I told you on Monday I was going to short this rally here. I said I'm just arbitrarily going to step in there and short it because I know what the game is by now. You're welcome, Michael. So if you catch a trade late, you'll jump it on the retest. Is this not the reverse of gold going long to 1990? So I'll look at gold in just a minute. All right, so I'll go to gold now. In the last couple of weeks, I've really been trading gold on the short side. So here was June 30th email that went out to our elite traders, and you'll get an email after today's webinar if you want to join the elite program. This is the kind of email that I send out where I show you what's going on the chart, why I'm looking at something. There was a number of bear price patterns. You had a double top here, you had a rounding top here, you had a coil, you had everything going here that suggested that this thing was primed to fall. So I said, put a sell stop in at 1801, put a take profit at 1707. And that's exactly what happened. I took $94 out of this trade. So you can see how big, a take profit I put, so I'm not looking to trade for 3 pip, bucks or $2 or 5 or whatever. Anybody who took this thing took $94 out of the market, as I did. Same time I said, short silver, both of these things. And, I just banged it hard and took out all of these profitable trades on those 2 trades. So I've been mainly trading gold from the short side, but, I understand how patterns work. So typically, whenever you have a major breakout, you typically have a retest. And it's just amazing how you can kind of set your watch to these things. It's actually kind of scary. So this is the same ascending broadening price triangle that I showed you with the IGV and with the S&P. So for the past year or so, I've been looking at gold through the prism of this big ascending broadening price. And this is exactly where I told our members to get out. So we had 3 expansions here. You can see these weekly bars. They were about $100 from high to low. And you can see how when volatility expands three times normal, I just hop out arbitrarily. And, if it went up, so be it. But this to me just, indicates a lot of emotion and, fear of missing out when you see that kind of expansion. So then, watch this thing stopped. I actually traded gold from the short side here, made a whole bunch of money in here. And then I've been watching it, and I've had a very bearish thesis for gold, despite the fact that we're at 40-year highs in inflation. So this is why you can't just study the newspaper and make trades. We went to war. We're almost, went to Third World War. So, usually gold, it's supposed to be an inflation hedge. It's supposed to be a hedge against wars. And so we should have seen this. Instead, we've seen that. And this is why you have to keep your eye on what the market is telling you, not what the Wall Street Journal or some journalist is telling you. So now we've kind of got this triple top, if you will, and you've got this kind of head and shoulders. And my thesis is that gold is going to go lower. But I think you're going to retest the breakout. So you can see how, every time this thing held on this long-term trend line. And this is where I was saying to our members to sell it at 1801, which coincided with the bear patterns here, and then also the break of this long-term trend line right around this 1801. So why did I pick 1707 as a take profit? Because you can see this is exactly where the support is. So I put, a little bit ahead of support. The market went to 1690 or lower than that. I ended up buying it there. So I kind of anticipated this move from, a breakdown here to here. So I took $94 this way. And now I'm kind of surmising that we're going to get a move from here to there and retest this breakout before we probably crap out again. So these markets just go in a sequence, and I just try and pick out moves according to what they're telling me. So you can see that we bounced right at this trend line, where every time we came here, you can see that the price action made a new low, close at the high, made a new low, close at the high, made a new low, close at the high, made a new low, close at the high. And every time we bounced off those lows. So to me, I just started buying gold right around this area here. Even though I think gold's going lower long term, I think we're at an area where I'm just trying to pick off a bounce. 30 bucks, 50 bucks, 70 bucks, whatever it is, I'll take it. But who knows? I mean, this could be one of these things, but I don't think so. I think we're going to bounce. We're going to retest maybe as high as 1800, probably 1775. And then I would look for the next major move to come down. So again, I'm not looking at inflation. I'm not looking at Jerome Powell. I'm not studying the newspaper. I'm not looking at GDP. I'm not looking at anything. I'm just looking at this picture. From this picture, I've been able to just carve out all kinds of money. So that's what I do. I just look at pictures. So Neelish says, can you show how to place trades? So basically, what I do is I look for a bar, and then I look, so this is a weekly chart. So now you have a combination of what I call a key reversal, where the market made a new low and closed at the high. So now the market has shown you here where the risk is. If you try and get long here, you kind of know that this is where the risk is, down here underneath this low. So what this key reversal said is that the sellers try to push it here, but by the end of the week, the market closed on the high of the week and the buyers were in control. So now it shows me, where to join this trade and where my risk is. So now, again, this is a whole thing in conjunction with many other things. This is a support area, the way this came down here. So now you have kind of a inside bar. Now we're only on Wednesday. We'll have to see, if this still stays like an inside bar. It might just keep going higher. So what I do basically is put my buy stop above a bar like this and put my sell stop there, Neelish, and then just let the market do the work for me. So I just have a way of, let me see where. So you can see that, and it's hard to kind of see what is going on here. Let me see if I can blow this up a little bit better. So when I was looking at this chart, let me just blow this up. No, too much. Let me try this. So this was preceding the move that dropped from 1800 down to 1700. So I was anticipating this drop by virtue of the patterns, right? So you can see that you made two highs here. You made this double top. So this to me was my guiding pattern. So, when the market does this or this or this, I'm calling BS on it. This is what I'm looking at. So I'm looking at this double top price pattern. And by virtue of the word top, it means that this thing is ultimately going to go lower. So if my thesis is this is a top, just like dollar Canadian, once we break through this neckline, then we've topped. By definition, we're going to go lower. So now, once I understand what I call the governing pattern, so this double top to me is the governing pattern. It's going to govern or dictate price behavior many weeks, months, maybe years going forward. So this is like my cheat sheet. This is like my trading for dummies. So every time the market goes like this, I short it. Every time it goes like this, I short it. And so, you know, when this was ready to break out of here, I shorted it. So you had both the double top, and now you also had this rounding top. And then you saw that all of these bars, like for 12 days, you had this coil. All of those bars were sitting inside the range of this. So for 12 days, you just kind of kept going sideways and coiling and building energy. And I'm surmising that the energy is going to break in the direction as indicated by the top. So if a market's made a top, it's very likely that now the energy is going to break to the downside. So I don't know that, you know, and so basically I told our members, just stick a sell stop here and let the market put you in. So if the next day the market opened up and went that way, you're not put in this trade. On the other hand, you know, if you're put in this thing, there's a good chance you're going to be in a good trade, and you would have taken out 94 bucks on this trade. So this is what I try and, you know, advise our members. You know, I try and show what the pattern is. So here was the silver. I said, look, we have both long-term and short-term double top bear price patterns. So with the word top in it, you know that this thing is eventually going to have to go lower. And it was both on the daily and the weekly charts indicating this pair could be poised to go over a cliff. And that's exactly what happened. So I was telling our members before this actually happened. Now, this isn't magic. I'm just looking at these patterns. So that's what we do at the Pattern Trader. Duncan says you need to join the program. So Duncan's a long-term member. Thanks for that, Duncan. Richard says, how many instruments do you check daily before you pick the ones to be traded? So, you know, Richard, that's a good question. There's literally 15,000 US stocks that I could look at. There's the nice thing about trading FX is that there's just like a half a dozen pairs. I can go through these pairs very quickly and scan these things and very quickly come to a decision. Do I want to buy this? Do I want to sell this? What do I want to do? So I'm, you know, look, you know, over the weekend, I do a lot of work. I look at the monthly, the weekly. I kind of have an idea where a lot of things are. And then I kind of, you know, have an idea of where I want to focus in. But I have a hard time because it's like a lot of shiny objects. I mean, today it's like the Fed and this and that and everything's going up and what have you. So I try and just find a risk reward trade that I can dial into. I like to build positions and sit in them and watch them expand. I like to get in the dollar Canadian at a good place and then watch it go and then leave it. I like to get in Schlumberger, see if I can get in a spot, and if I'm right, you know, watch it go. So you can't be everywhere. You can't dance at all the weddings. So it's about, you know, just finding trades that have a good risk reward. I try and find trades where the risks are very small and the rewards are commensurately much bigger. So when I was, you know, going to short gold there are certain times where I feel like there's no risk. When I was shorting gold at 1800, right when it was about to break that long term, there's certain points where it gets to a point on the chart where there's literally no risk. You just know what's going to happen. And so, you know, and then, you know, other times like this, you're kind of fooling around when the market's just thrashing around all over the place. You know, I just play around, but I look for trades like dollar Canadian where I can start building a position before it goes. So I like to get the, you know, the horse right as it's about to come out of the barn. Now, once dollar Canadian is gone, it's, you know, it's down 200 pips. Now, where to get in, what the stop loss is, it's a little bit more difficult. But if I can get in right as it's about to come out of the chute, then it's, you know, a no-brainer. You know, this thing is sitting right on this neckline here. And, you know, it could very well oscillate above and below here, 50 pips or what have you, but this thing is ready to, you know, to go to the next level. So now, you know, I'm in a good spot. I know where my risk is. Now, once this thing gets going, it's a little bit more arbitrary. Where do you get in? You could very well, go back to the breakout area and then go back down. So every trade has a different parameter. So I like to get in right as something is about to break out of, one area. Now, once this thing gets going, I will add to this thing. So it goes down, retest, adds. Now it gives me a key reversal. I'll add here and get short here. And so I will add to this trade, along the way. But my add will be, much lower percentage because, I'm getting in at a much, I'm getting in at a more mature point closer to where, it could bounce here. So my add is going to have a whole different parameter than if I get in up here. So every trade is different based on where you get in. And I try and identify things as they're about to go from one area to another. So, I can only do so much on these things. I just wanted to share with you a way. There's a ton of questions. And, we've got an early morning session where I go live, and that's the best thing I do because, the markets are actively trading in the morning, just like they're actively trading now. You can see Qualcomm is down $4 in the aftermarket, and Meta, Facebook is down $4 also. So, these things are actively trading now, but they're also actively trading before the market opens. And so I do an early morning session. It's called the Pattern Trader Club. We're going to rename it. And this is what I really suggest if you're interested. Then I go through the actual trades that I'm looking to do that day. I kind of draw up why I'm looking to get in them. And, we can, actively look at things. So when I'm looking to short something and the market opens higher, I will just short into a higher opening. And if I'm looking to buy something and it opens lower, I can buy it into a lower opening. And so we talk about all of that on the early morning session. And this is what it kind of looks like. We just started opening it up to a community, where I kind of, sometimes put some comments here, Powell indicating a dovish pivot, no recession. I'm buying beaten up retailers like Target. And then I kind of did a whole thing today on my thesis on Schlumberger. So this is, kind of a community. We're just opening it up. You can see there's 27 members that are just pending right now. This thing is going to really ramp up, and hopefully we're going to have a great little community there. So, I started posting, my Schlumberger trades here. And, this is where I start talking about the Facebook trade and, what it looks like compared to Schlumberger. So this is what I was looking at this morning. And so, could it be like that face? So this is what this community is. And if you're interested, it's, I think a great thing to do. But, don't believe me. Basically, what I suggest you do is read what did I just do with this thing? So what I would really love for you guys to do, if you would, is leave your own review, good, bad, or indifferent here. And then for those of you who are evaluating our programs, just go and see what others have said. So don't believe me, just, go in and there's hundreds and hundreds of reviews and, see for yourself. So I know there's a lot of questions. Obviously, I can't answer everything, but I just wanted to introduce you this week to a way of looking at the markets and taking out, huge cuts in the market. So I started talking about going short dollar Canadian, and you can see that it's starting to, unfold. I started buying gold. And so I didn't know what was going to unfold this week. I was just looking at the same patterns everyone was looking at on Monday. So Decent says, I trade crypto. So, everything that I talk about, you can apply to crypto markets. So to me, I'll trade two, bugs, going up a wall if there is a high, low, and close on them. So, I trade cryptos on a macro level. I just look at the big picture here. And, frankly, I'm pretty bearish on crypto. I don't really see a whole lot of, inherent intrinsic value, but they are trading instruments like anything else. And so, I look at this like I would, sorry, I'm just getting hung up here. And so, I've been, I bought these things and sold these things at pretty critical current junctures, but I kind of left them alone now. I still think Bitcoin's going to go to $10,000. So, but you can use all of, sorry, Mike, for some reason, here it is. So I analyze any chart the same way. So it doesn't matter if it's corn. I don't care if it's orange juice futures. Everything has, certain rhythms and a cadence and certain patterns. And so my wife loves crypto, and I was begging her to get out here because I saw this double top. And then I was begging out her to get here when I saw this, head and shoulders. And now, to my mind, this thing has formed a bigger head and shoulders. But what I do is I look and see how these markets, so here's a shoulder, a head, a shoulder. And to my mind, when it broke 32,000, it set in motion a move for a much lower price. But, if we start kind of getting above here and start ignoring that, then this becomes a busted pattern. So what I do is I look at patterns, and then I see how does market respond to a pattern. So it's very possible for markets to break out. They could even retest it, suck some more people in there, and then go back down. And I do think this is what you're going to be looking at. But it doesn't matter. To me, you can trade, anything the same way. So there was a point right here when it broke to 20,000, then it went to a long-term gestation or consolidation, and I start buying it right here, where I start seeing it break out above here. So you can see how this was higher lows, and then this was a breakout, and I bought it for that, and then I haven't touched it since then. I wanted to short it, but I just haven't played this. So you can see that, again, I will trade anything, and you can trade crypto just looking at a price chart. So to me, there were many signs that this was over. There was a double top there. And then if it wasn't enough, there was a, head and shoulders here. And then if that wasn't enough, then you had a big, bad looking head and shoulders. And to me, the distance from here to here is so vast that this tells me that you're still going to go much lower. So Quentin, I can't talk about trades, what I manage, because every trade is different. Every trade is different. I showed you how I'm in dollar Canadian, and, now my risk is to the high. So, I bought, I started actually shorting into these, into these highs. I sold some on the lows the other day. I've, been selling them at all these prices. So you could get in here, you could put your risk there, and this is what I'm looking for. So this is an example of how to manage this trade. Neelish says, who do I contact to join? So you can always contact our support team at support@thepatterntrader.com. So, and then, I'm sure you'll get a registration link if you're interested in our elite. You can't just buy the elite program off our website. You need to talk to a team member. They need to make sure that you understand the program and that you're suitable. And we turn away quite a few people because we really just want a certain community, and we want people who are really committed and not just tire kickers. So Johannes says, I've been with Mark for 2 years now, I believe. So Johannes, I really appreciate that. Thank you for that endorsement. And so there are other members on here too, but, again, I would, don't take anything I have to say. You can do your own homework. Go to the website. I don't know where I put it. I'm going to find it again. So let me just, sorry, I'm just having problems with my internet connection here. So are there any questions about the methodology? So I'm not going to go in and just, look at endless charts. If you're interested, this is kind of the methodology. I really wanted to orient you to a way of looking at the markets where you don't have to look at what Jay Powell says. You don't have to, understand markets. You don't have to be an economist. So I would really appreciate if you guys could just, write a review. I know it's a pain in the butt, but I spent 3 days here and I'd love to hear from you. And I learn from you. I'll learn if I did something wrong or if you didn't understand anything, it makes me better for the next time. So whatever you have to say, please share it. Nicholas said, is it primarily the general direction of the market that tells you the governing pattern? No, it's really the other way around. It's the governing pattern that tells you where the market's going to go in. But sometimes the markets will just be in a trending pattern, and all you have to do is mindlessly join that trend. For a year and a half, the S&P was just going straight up, and all you had to do was get in sync with the trend. So I just try and observe, what is the sequence? And sometimes, the markets are trading directionally, but most often they're not. So it's pretty easy to get in sync here and then sometimes in here. And then now this is where, you have to know what you're doing, because this is where it will chop you up. So to me, it's now not about a market. I would say it's a market of stocks, not a stock market. So some stocks are going up, some stocks are going down. And so this is an index that's generally going one way, but a lot of stocks are doing all other kinds of things. So, this is where you can't really characterize the markets. The markets now are in a kind of, banging in a trading zone here, and they're not directional. And this is where it gets, very tough. And this is where you have to know what you're doing, because you can just get caught out here and think, okay, this is, going up. And then you don't understand, why is it doing that? So I just try and look at the footprints in the markets, and the markets actually point to where they want to go, if you understand what you're looking at. So Joe, I put a strategy packet that includes some of my high value patterns in the strategy. I'll just put that there again. And that kind of articulates. And then I also offered you my book yesterday. If you want my book, it has all of the patterns and explanation there. So Daniel says, thanks for your information. Love your approach to the market. Makes a lot of sense. So thank you, Daniel. I printed out this trading handbook and have it on my desk. So thanks, Johannes. Neelish says, thank you. My first time exposure to the field was really educational and interesting. Well, hopefully I saved you a lot of heartache, because a lot of people I know have come here from trying other things. There are a lot of scammers out there. There's a lot of people who have these whiz bangs, claim to have these whiz bang, trading systems where basically, you've got to evaluate all of these indicators to kind of figure out, what's going on. You'll notice here, I have no volume. There's no MACD, there's no, moving averages, there's no Bollinger Bands. I just look at, charts and patterns. And so once I understand the pattern, so to me, these are just bear market rallies in a down market. John, you are always welcome. John's always on every one of my sessions. I don't know how you have the patience, but God bless you. Duncan says, I can vouch for you. I'm still here 4 years later. So yeah, we have a ton of members that have been here. I started the Pattern Trader 5-6 years ago, and still have some of the original members. So it either says a lot for them or a lot for me. I don't know. But this is all about, really devoted and a commitment to yourself, right? What do you want out of the markets? And I always say, you can give a man a fish and he'll eat for a day. You teach a man a fish and he'll eat for a lifetime. And that's really what the objective of what I try and do is I try and give you all the tools. So if I get hit by a bus, you won't have to, go and listen to those idiots on TV to figure out what's going on. The market is always right. I have an opinion. Jay Powell has an opinion. The market tells you where it wants to go by virtue of patterns and price action. So I just try and break apart what I'm looking at, what everybody else is looking at. You can see this kind of S&Ps in this, little channel here. And now I see, does the market dance out of here? Is it breaking out? Is this a fake out and breaking back? So I just look, what I do is I put my structure, and then I see how does the market, break up and down, in respect to these lines. So it's, a more dynamic process. So most people will go, and see a chart pattern in a textbook. And then in the textbook, it's, it looks like it goes this way. But in life, sometimes, this pattern will stop short and you'll wonder, how did I lose all of that money? So the market does lay all these traps, and I try and help, avoid that. You can see here was a period that looked like a double top, but it didn't confirm it. You can see right here, and this is what the market does. It comes within a millimeter, trapping you in there, and then, going a minute the other way, and you go, what happened? I thought that was a double top. So unlike dollar Canadian now, which is dollar Canadian is now kind of gone through here, and now it's confirmed this. So I do think that whatever we're looking at in dollar Canadian is now real, and you're going to see that. But sometimes the market will trap you, just like it did right there, where you're saying, hey, that's a double top, and then how come I'm losing all this money? So, I kind of look out for those traps. To me, it's more important to figure out where the traps are than where the opportunities are. Kyuta, you're welcome. Tony, you're welcome. Nicholas said, this is great. These sessions have been great. Learned a huge amount. Excited to learn more. Took a few spread bets on the previous day's sessions and currently in a nice profit. So hopefully this was worth the price of admission then, Nicholas. All right, guys, I'm going to leave you there. I'm sure our team will get in touch with you. Join the Pattern Trader Club. You'll be with, hundreds of other like-minded traders, and, we'll all have, a good time together. Neil says, do you ever go on holiday? I should. I need some time off. And, this business has kind of trapped me into a perpetual cycle here. And unfortunately, I'm dealing with some physical issues, so it gives me something to do. But all right, Raymond, Joe, thanks, everybody. We'll see you later. And please leave a review if you can. Thanks a lot, man. All right. Thanks, Dwight.